Thank you, David, and hello everyone, and sorry I'm a bit late. My argument, I'm going to read the first part of it and then we'll work through a number of overheads to build up the story. But my argument is that government, state and federal have not let Australia's forestry industry grow up. And by that I mean grow up economically. And by that I mean the processing arm of the industry has never gained, through long-term experience, the skills to be confident in taking the inevitable risks of planning and planting their raw material, meaning wood. This is because government, state and federal, have never let the industry gain those skills because it has always said yes to their lobby groups and foresters and unions and their request to finance plantation establishment, either directly through subsidised loans and grants or indirectly through high-cost, tax-effective investment schemes. With government bearing the risk, industry, their lobbyists, foresters and the forestry unions face virtually no downside in overstating the industry's wood requirements, and so the market is overplanted. Ironically, this brings opportunities for native forest protection, but government ignores them over the years, many decades now, because of political arrangements at the highest levels, political ideology and policy compaction from long-standing alliances within the forestry sector, including the bureaucracy. Breaking through the policy compaction probably requires progressive politicians across the three major parties, Labor, the Coalition and the Greens, to join forces to do the job. Today, and with the forestry industry in crisis, we stand at a fork in the road. Once again, we stand at a fork in the road. Governments can choose to take the conflict-free path, but to do this, they must engage at the highest levels and immediately. I'm going through a number of overheads to work through that argument. The first overhead is actually a demonstration of, the first overhead is to demonstrate that I've got a bit of a research record. And today I'll be working mainly from those 7 documents. I'll read from here. And they are very quickly a work that's in a journal article that's in press at the moment that looks at the global wood market and in particular China. The second one is a paper that I delivered earlier this year to the Agricultural Economics Conference in Adelaide that looked at the distortions in agricultural land and water use between food and wood, effectively, through the managed plantation investment schemes. The third is submission to a parliamentary inquiry, one of 4 now, over plantation management investment schemes. The next 2 are journal articles in the policy arena. The second last one is my book, The Forest Wars, that looks into the politics of why we have not solved Australia's forest conflict. And the final one looks at what ultimately is, I think, the source of the problem, which is the nature of commodity production systems. Evidence of a crisis in the forestry industry. This is a chart showing the stock exchange price, or the stock prices, share prices of Australia's plantation managed investment schemes. Now I'm missing out some there, like Elders Forestry, because Elders Forestry is a subsidiary of Elders, and obviously bigger things happen in Elders than just planting trees. I've standardised them all to 100 in early 2003. And I want you, first of all, to focus on the black line, which is the All Ordinaries. The All Ordinaries here, okay, we see the global financial crisis cutting in there. When I sent this to a financial player a few days ago, the response back was, "Wow, I've never seen overshoot like that before." Now, we've seen it in one company, but this is a collection of companies in a particular industry. Now, I won't run through the companies that are clearly there, but essentially boom times for this industry as far as the market was assessing plantation managed investments. You'll notice that they're all starting to collapse before the global financial crisis. Then they joined in with the global financial crisis and they haven't recovered. Okay, if you look at the 100 here and the 100 at 2003, they're all well below. 3 of them have collapsed. Now this is a crisis for the forestry industry because for 10 to 15 years, the managed investment scheme arrangements has been the main source of wood growing for the entire Australian forestry industry. Okay. Now before we just get into the story real, I want to just run through what the Australian forestry industry is today. So this is a snapshot of the industry in 2007-2008, the entire industry. And we've broken it down into 2 groups. The ochre is the plantation sector and the blue, the native forest sector. You can see there in the figures that plantation wood supply is now significantly greater than that from native forests. The other thing that you'll notice is with the dark ochre is the processed product from the plantation sector is a major part of the industry. And from my perspective and from economic wealth and employment perspectives, this is entirely good. It's actually, I also argue, entirely good from a plantation growing perspective too. The plantation sector now produces 80% of our sawn timber in Australia, mostly from softwood plantations. You'll see that sawn timber from native forests accounts for 4% of the industry, the entire forestry industry's production. So every time you hear talk of native forest sawn timber, remember it's 4% now. You'll also see in the lighter shades that exports of unprocessed wood are very significant for this industry, particularly in the native forest sector as a proportion of its total log cut, where around 80% now Australia-wide of the native forest log cut is for chip exports. Much higher, how much higher can you get than that? Around 90% or so is the market share for chips within the major logging regions of Australia, so that's Tasmania, Victoria and New South Wales. So that just gives you a quick overview of the industry as it is today, but it's taken a long, long time for this structure to emerge. To build up that picture of how we've got to such a plantation dominance, and particularly within the softwood sawmilling area, we need to just go back into some history. I'm going to only go back to the 1960s. In the late 50s, early 60s, the foresters and the industry secured an agreement from Prime Minister Menzies to underwrite a softwood plantation expansion in Australia. That took a little while to get through the states' rights issues, and it's funny to see John Brumby doing the same role that Bolte did back some decades ago in terms of frustrating some policies that the Commonwealth wanted to get into play. But nevertheless, the Commonwealth did get the softwood funding going for the softwood planting program, and we saw an escalation in softwood planting Australia-wide because the funding was done on a per capita basis. Now 30, 40 years for those trees to grow, and 30 and 40 years basically coming on stream around the 80s with the earlier plantings and after that. Now, the point I want to take out of this graph was that to set the planting target for the softwood program back in the 60s, the foresters, the Forestry and Timber Bureau, projected Australia's softwood or wood requirements, softwood sawn timber requirements in the year 2000, which is the end of the first rotation. And they projected that volume would be required to meet Australia's consumption needs. So off the planting went, and effectively what happened was we planted the entire sawn timber market for Australia, and in the process, as more and more of the softwood resource came on stream, we started displacing the native forest sawn timber. Now, some environmentalists and some industry players have different views on this. They say, no, we ran out of good quality logs, and no, we put too many areas into national parks. Even if all of that was true, this would have still been how the play would have happened, because there was no growth in Australia's sawn timber consumption of any significance for that entire planting period. And the only way that that softwood resource could be put onto the market was through displacement of native forest product. Now, the outcome of that was we could have reduced our native forest logging levels, and we could have taken a fork in the path to a no-conflict future. In fact, what Australia did was opened up and made possible opportunities to introduce chip exports into the native forest part of the industry. So as the sawn timber production was falling from native forests, Australia moved more and more into hardwood chip exports. And I'll leave this downturn for later, such that in total, Australia's native forest log cut has remained virtually unchanged through that entire period. So the key point here is that we lost a strategic opportunity in the 1960s. That I really want to draw out here is that we lost a strategic opportunity in the 1960s to move plantation investment away from the public sector and into the private sector. And it's taken me a long time to really understand the strategic significance of that. I mean, it's easy for economists to say, and I am, it's easy for us to say, yes, of course the private sector's better, but that's pretty glib too. It's taken me a long time to accept that that was a really missed strategic opportunity. And it's not as if the argument wasn't had in the 1960s to put the softwood planting program into private sector footing. We had the Crawford inquiry at the time into manufacturing, and that was their push. We also had Treasury fighting strongly in the Cabinet submissions for the softwood funding program to also put it into the private sector. And my argument is that if we had have had that strategic opportunity taken at that time, the forestry industry in Australia, in particular the plantation processing sector, would have had so much more experience in the job of planting wood and the risks associated with planting wood, and would have learnt from that experience and built up their own mechanisms to get their market analysis much more finely tuned, because if you don't, you pay for it, and to also work through the bits that were needed for assistance. Instead, what the path we travelled was a path where government played the role of wood planting, and forest lobbyists came in and became much more involved in the job of lobbying governments to secure funding for wood planting. Okay, and now what we have is some very big divides between the actual processing sector of the forestry industry and who makes decisions and who shares the risk of growing wood. And that will come out in our hardwood planting sector. Now, by the 1990s, early 1990s, something was happening in the wood growing side, which was it was starting to flatten out seriously. And there's one thing that we notice in industry, in the forestry industry, is that when there's no planting going on, new planting or first rotation planting, industry gets panicky. And the foresters get panicky too. And we certainly saw that in the early 1990s, where industry was getting quite restless about what will happen, where will their future growth come from. And of course, they haven't got any control in this because they're entirely dependent on government for their planting. They haven't learnt and worked through mechanisms to secure their own financial arrangements for planting. And so we enter into the second phase of Australia's plantation program, and it started in the early 1990s. Now, at that time, something was also happening in the climate change area, because in 1992, Paul Keating released the National Greenhouse Response Strategy, and Mari Taylor, who was presenting a Fenner seminar, alerted us or reminded us of this strategy in 1992, and its aim was to reduce Australia's greenhouse gas emissions, believe it or not, by 20% from 1998 levels, by 2005. That was a talk in 1992, and of course in 1992 was the Earth Summit, and that was really the beginnings of the UN Framework Convention for Climate Change, which led to the Kyoto Protocol. Also in 1992 was the National Forest Policy Statement, which supported an increased plantation estate, but it lay dormant for a while. By 1994, the UN ratified the United Nations Framework Convention on Climate Change to stabilise atmospheric greenhouse gas emissions to prevent human-induced climate change. And also around that time, and slightly earlier, the mining industry is getting very anxious about carbon taxes to start to see the implementation of the National Greenhouse Response Strategy. Tree plantings as sinks started to be talked about and started to be researched. So this is in the early 1990s. In 1995, a small group of plantation industry people and lobbyists met with some federal ministers and presented a vision of trebling Australia's plantation estate by 2020. By October 1997, that vision was launched. So we can follow all of that through here. We see this flattening off in the planting of softwoods in particular by the early 1990s, and we see this period where we've got talk about climate change, Australia's response to it. The 2020 vision launched, there's a target up there, and off hardwood planting goes. But already in place before 1997, the launch of the Plantation Vision, was the managed investment scheme arrangements. They were already in place. So essentially the package was in place to see the acceleration of a hardwood plantation program in Australia. I just want to spend a bit of time going through how the managed investment schemes work. So I've used here Great Southern, which is now collapsed, but their 2007 project. In year one, the tax minimising investor pays an establishment fee to Great Southern of $9,900 a hectare, and that amount is fully deducted from the taxable income earned from other activities. In year 12, that investor, and I put it in inverted commas because some people argue that this is not investment. In year 12, investors receive income from the net harvest proceeds with fees and lease costs, etc., deducted. The reality is that the actual cost of planting and managing a hectare of trees over a rotation is around $2,500 a hectare. But in year one, the investor has put in $9,900 a hectare to do that job. So that's what the Parliamentary Committee, and I agree with this statement, say when they say high cost investments. These are high cost investments. Now, to get them over the financial or commercial viability line, there had to be some quite heroic assumptions, particularly about wood yields, and also, in my view, about woodchip prices. The early plantation prospectus documents had real, inflation-adjusted price increases of around 1% per annum. The reality is they were declining by about 1% per annum. Now, for these arrangements to actually work in terms of the whole legislative frame, it's not so much now a problem in the legislation. In my view, it's a problem within the detail of the implementation of tax law. And that is that the Australian Tax Office gives investors dispensation from commerciality tests deeming their business to be commercially viable. We can have arguments about whether those commerciality tests are right or not, but that's the intent of them, is to rule out businesses that are really hobby farms or non-commercial businesses. The ATO has given a dispensation from going through those tests, and one of the arguments is that the future income comes so much into the future that it can't be measured within their 4-test category. But in giving that dispensation, the ATO must have judged that the plantation managed investments were inherently commercially viable. And without that arrangement, investors couldn't deduct their upfront fees and other costs, so the $9,900, off their taxable income. And my argument is that if the tax office went through their records for declared costs and income received, it's highly unlikely that they will come up with an outcome where these investments have been shown to be profitable. Okay, so Australia went on a pretty strong planting adventure over the 1990s in the hardwood sector, and it's largely hardwood chips. I just want to give a summary now of pulling the softwood and the hardwoods. I don't want to do that just yet. Now, in terms of commercial viability, one of the things that we should be looking at is, of course, looking at the market. And the Plantation Vision was very much a document that claimed to be market-driven. So when we look at what the market reality is for the hardwood chip sector, where most of these plantations were geared, we go first of all to the key market, which is the Japanese market, because that's where 85% of Australia's wood chips are sold. And you'll see there managed investment schemes were starting to get some steam up in the early 1990s. You see when the Plantation 2020 Vision was launched, and since that time the Japanese market has moved into decline. Now this is their consumption of all paper, if we go to the big levels all the time, but the hardwood chip sector within that was also at the time showing a flattening and then a subsequent decline. So the major part of the market for Australia's hardwood plantation program wasn't supporting an investment strategy of rapid growth in hardwood plantations, unless there was something super good about Australia's competitiveness in hardwood chips and hardwood chip growing. So let's look at the global wood market and how it's been tracking. So the blue line is the FAO's data on wood production or wood consumption globally, and since 1980 through to today, actually I did that calculation through to 2007, so not the last lot of data that's just come in, and I put a semi-log regression to it, so I'm not taking endpoint data here, but global wood production or consumption has increased by only 0.4% per annum over that long period of time, since 1980 through to 2007, only 0.4% per annum. I think that might be slower than the growth rate in log native forests. Now, when we look at the processed products, the main categories of the processed products we see, and this is again globally over that period of time, so it's 1980 to 2007, we see sawn timber declining, wood panels growing quite strongly. It's a smaller part, of course, of the total solid wood market, much smaller than sawn timber, but it's growing its market share. Wood used to make paper, we don't actually have the measurements for that because we don't measure it, but we do know, this is the FAO, we do know that wood used to make paper has to be growing at less than 1% per annum because we know that wood pulp is growing, pulp made from wood is growing at less than 1% per annum, and we've got productivity improvements going on in the pulping sector all the time. So the global market for wood isn't a strong growth market either, 0.4% per annum. So we look then at China, and I'll speak, I'm not sure when I'll do this, but I'll be speaking about China and the global wood market in a lot more detail in a few months' time. This is a picture of the Chinese paper industry. And what we see in the prospectus documents promoting investment in plantation MISs, hardwood, we see statements about how strong the Chinese paper industry is growing. Now, usually those statements apply to what's happening up here, that growth rate. But in fact, if you're growing wood, you should be looking at this growth rate because that's the wood pulp production used in paper production. Okay. When you do that, you've got, okay, it's growing, but it's nowhere near as fast as the total because the total includes this amazing expansion in China's use of recycled paper. Someone the other day sent me some figures on Japan's exports of recycled paper and asked, can this be true? Yes, it is true. Okay. So China's playing a strategy where it clearly understands. No, I should just finish this graph off. Those two lines show, the top one shows for the world minus China, wood pulp as a percent of paper production. We see a trend decline. It's the same variable for the bottom line, but it's just for China. Wood pulp as a percent of paper production. So China's making its paper with a significantly greater, higher levels of resource-saving technology. It's another matter whether we can transfer this across the world. I mean, obviously, Japan can't if it's exporting a heap of its recycled paper. But a point I want to make here is that China's paper industry growth is not what we should be looking at from a grower perspective. We should be looking at China's actual demand for wood. And the last thing China wants to do is to drive a global wood shortage problem because that will generate price increases for wood, and that's not what China wants to do in its own interest. And so China's been working on a strategy to avoid that very outcome, and the first thing it did was in the mid-80s implemented a policy of preemptive price negotiations. So paper, or I should say wood importers, secured markets, but if you look at the price trends, they were in decline to secure those contracts. Its second part of its strategy was resource saving. So paper recycling is obviously front and centre in that. But also China has moved into a much more, a greater market share for its wood-based panels relative to sawn timber. And wood-based panels are resource saving in the sense that you can do the job with less wood. And they've also moved down the path of encouraging investment in high-yielding pulp mills. In other words, making the same amount of pulp but with less wood. And of course, they're into plantation expansion as well. So it isn't surprising that when we move back to that overhead of the price trends and the share price trends, that everything's starting to come home to roost for the MIS industry. And it's largely because they have overplanted the market. And that's largely because government has played the role of providing industries wood resource without the industry itself ever having the long-term experience of working through its own market strategies, its own market outlook, and working through what sort of investment strategies and risk-taking strategies it should put in place. I just want to summarise what's the Australian forestry industry today and its long history. If we look at the green line, it's ABARE data. The trends in the amount of wood we need to meet all our consumption of wood products, whether we make it ourselves or we import it. So all our sawn timber, paper, wood panels. The ochre line is our native forest production, and the black line is our plantation wood production. Now, the projected part, where we see that huge leap at 2010, is the maturing hardwood plantation estate. About another 10 million cubic metres per annum coming on stream around 2010, the BRS projects. So, for those who see this positively, as you can obviously, there is an opportunity for major native forest protection. But it'll need some policy intervention to get there. And I'll come back to that. So, for people who are systems thinking, I think like Barry and Katrina, who I think might be here, not waving. For people who are systems thinking people, they'd love to put this into some circles, but I'm going to leave it in storytelling language, because I think this is how we understand it better. So the first part of this story is that in the 60s we had a federal government engagement of funding for softwood planting. We planted very strongly and it resulted in wood coming on stream, and that's generated the trend I've labelled one. You know, strong growth in softwood plantation sawn timber production. It worked to displace native forest sawn timber production too. We saw a movement of native forest wood into the chip export market, 3. Then we had the next Commonwealth Government action, which was supporting the managed investment scheme arrangements for plantations. We're seeing this resource come on stream now, 4, and it's coming on stream very, very rapidly. It's resulting in a displacement of the native forest chip resource, largely because the markets weren't projected very well at all. So we're seeing a reduction in chip exports from native forests. Now, we have around 1 million hectares of hardwood plantations established in Australia today. Not all of them are in the woodchip, fast-growing category. If we've got a mean annual increment of 15 cubic metres per hectare per year, which is abysmal, it's half of what the prospectus documents were promoting. But let's keep it at 15. It's just slightly lower than what the Bureau of Resource Sciences used on average for their calculations. Mean annual increment of 15 means 15 million cubic metres of wood coming on stream per annum. That's 3 times where native forest chip exports are at the moment. Okay, let's cut that by half, because I actually think that's my sense of what will happen. 7 million cubic metres. Okay. That's slightly more than the entire native forest chip exports. And this is the game that industry is playing out right now. It'll be over in a few years' time. So when I say that we've got a fork in the road, this is it. Okay. And we faced this same fork, this same opportunity in the 1970s, where we could have taken the path of not putting a chip export industry into native forests. But the history of forestry in Australia has always been to block off conservation outcomes for native forests. And the way that's been done is through something called the forestry trade deficit. And I don't think anyone could have possibly not heard about the forestry trade deficit. We never hear about problems about a computer trade deficit. We don't hear problems about a perfume trade deficit, but we hear really big problems about a forestry trade deficit. Oh. Now, the forestry trade deficit, it's a structural problem within the paper industry. Okay, and we can go about that in question time. But the forestry trade deficit works to do two things. If we've got a forestry trade deficit, that means we don't have enough wood. So we have to go and plant more. And this is not an industry that's taking any responsibility for its planting here, because it's the government that's saying over all these decades, we'll take the risk. Okay. Forestry trade deficit says we've got to plant more. Okay. There are no downsides here on the forestry industry because it's government that's taking the risk, either directly through, as we did in the softwood subsidised loans or grants, or indirectly, as we're doing now, through tax breaks on high-cost plantation managed investment schemes. So that keeps everyone in the forestry industry happy in the sense that they're still planting and they don't get panicky because no one's planting, not planting. And the foresters are happy and the unions are happy. Okay, and the bureaucrats are happy. Everyone's got something to do. It also means that we shouldn't stop using native forests for wood because we've got a forestry trade deficit. So options for using native forests for carbon sinks, for example, or biodiversity conservation, or for whatever, they get blocked too because we've got a forestry trade deficit. Now when we look at this forestry trade deficit, and I've put it back into real terms, so inflation adjusted terms, the blue line down the bottom, we can see since 1990 and even before, it's just hovered up and down. Yet our wood production, which is in this case both native forests and plantations, our woodchip production has grown very, very strongly. So when Minister Anderson launched the 2020 Plantation Vision, with this vision, the prospect of converting the nation's current $2 billion trade deficit in wood and wood products into a sizeable trade surplus is totally feasible. It's not totally feasible because the problem lies in a concentration in the hardwood printing and writing paper market. Completely different problem. And Minister Burke more recently said, we still have a $2 billion trade deficit in the trade of timber and forest products. Okay, we still do. But we worry about that. We don't worry about perfume, computers, toothbrushes, etc., but we worry about the forestry trade deficit. And it's largely been used as a play to prevent opening up options for how we might like to use native forests. Okay. So what do we do? It's not the first time I've said this, but we should be terminating the plantation managed investment schemes. And we should be doing it, ending them, because they're driven by tax minimisation, they're not driven by wood market realities. And they're leading to serious problems in the use of, and serious distortions in the use of land and water. And they're also a waste of public funds. Now, in two states, not Tasmania, in two states, Western Australia and Queensland, both of their leaders, their premiers, engaged in the forest conflict and used the plantations as an opportunity to deal with the conflict. But it's not happening in the three main native forest states of Tasmania, Victoria and New South Wales. But that's exactly what we need. We really do need high-level political engagement to reset the forest policy compass. Not just for industry, but also environment, because the two actually are related. This is a public policy issue. And the reason why we need that high-level engagement is to liberate policy from the compacted alliances within the forestry lobby groups, the foresters, the forestry unions, and also bureaucracy. And I even think that maybe it's time that the more progressive players in the three main parties, the Labor Party, the Coalition and the Greens, actually get together and start looking at this issue of the forest conflict. We should also be tackling the issue finally, and I say finally there because my entire time working in this forestry research and policy, which is now nearly 30 years, this issue has not been addressed. who should take responsibility for growing wood and what's the industry's responsibility here. And if government has a part of a responsibility, what are the processes for ensuring that we get good regulations in place? I also argue that we should be using today's forestry crisis, strategically, and by that I mean putting in conflict-ending backstops, and by that I mean ensuring that native forest wood is not opened up to the energy market. There's also a very strong argument for bringing in a science-based carbon stock policy for our natural environment. The work of Heather Keith and Brendan Mackey and David Lindemeyer and Sandra Berry with their Green Carbon Report and their subsequent documents is showing the importance of the carbon stocks in native forests and also the importance of rebuilding those carbon stocks in forests that have already been logged. Okay. Now, we should be putting those sorts of initiatives which bring in science, concepts of resilience and permanence into our land use sector policy for meeting our climate change responsibilities. But for many years now, and it's only just been recent, we've had tree planting as the only mechanism that would get an incentive for investment through the then proposed emissions trading scheme. We've also seen more proposals for biomass energy, both within native forests and also within plantations. And one of the ways this is argued is it's much better than burning fossil fuel. But there are other alternatives, and we should be looking at each of these energy systems with a full life cycle analysis so that we have the information to be able to rank these different energy systems and make wise choices. And my final point here is that all the time now we're moving into forestry not being a forest versus conservation conflict in the land use sector or in the forestry area. We're moving into forests and wood production and food being in conflict too. And that's one of the intents behind the last recommendation, which is a major future direction setting review of Australian agriculture. So that's it, and happy for people to ask questions.